Chairman, I rise to take a call on Part 1 of the Taxation, Annual Rates, Employee Allowances and Remedial Matters Bill, which sets the annual rates of income tax payable by New Zealanders for the forthcoming year. Mr. Chairman, before we do that, before we finalise our consideration of this part, I would like the Minister to take a call to explain what proportion of property transactions attract income tax under these provisions. And the reason why I'm interested in this was that the Minister at Select Committee on Financial Review just a couple of weeks ago said that we have a capital gains tax in New Zealand. Well, we actually don't, but we do have some classes of property transaction which are taxed as income on the gains. So if you are a trader in property, or if you buy with a disclosed intention to resell at a profit, then that is on your income account, and you pay income tax at the annual rates of tax that we're setting in this Clause 3 in this Part 1 of this bill. Now, I challenged the Minister to tell me what proportion of property transactions are taxed in that way, and he at Select Committee, having pontificated, as he and his fellow members do, that we already have some notional capital gains tax according to them, said that he didn't know. And so I then asked the Minister, well, do you know whether it's closer to 0% of those property transactions than it is to 100%? And he couldn't answer that either. Now, we on this side know that it's closer to 0% than it is to 100%. But the Minister, to give him credit, said that he would answer as a question to the Select Committee at Financial Review, answer the percentage of the investment properties that are bought and sold in New Zealand, what percentage of those are taxed for their capital gains. Now, I haven't read that answer yet to the FEC, but I expect that this very assiduous Minister will, having recognised the own failing of his knowledge at Select Committee when he came to talk about tax policy and why government should vote him money to run the Inland Revenue Department, I would thought that given that we've got this rampant house price inflation, no capital gains tax, it's been a source of some controversy across the House with the National Party opposing it and the opposition saying we're in favour of it, a source of some controversy added to by the OECD saying we need it, a source of controversy adding it by the IMF, another of the international advisers saying that we need it in New Zealand. I would have thought the Minister would at least want to know what percentage of existing property sales are actually caught by our income tax provisions already, and therefore wouldn't be caught by a capital gains tax, or would bolster his argument as to why we haven't had it. I suspect that we're not going to get the Minister rising to this House to take advantage of this heaven-sent opportunity to clarify for the country what percentage of investment properties that are purchased and then on-sold. People get tax deductibility for all their interest payments. They often offset their taxable losses against their other income. In fact, in a recent year, that investment class got a tax refund from other taxpayers because overall they ran at a loss, but they still not taxed on their capital gains. So, Mr. Chairman, I am looking forward to the Minister leaping to his feet, telling us what percentage of investment property purchases or sales of investment property are taxed for their capital gains, because I know that the percentage is far closer to 0 than it is to 100, even if the Minister doesn't.
Mr. Chair.
David Clark.
Mr. Chair, I may have beaten the Minister to his feet, and I apologise if that is the case.